Alright, y'all, welcome back to the Tao of Investing. My name is Daniel, and today we're going to be looking at how to read financial statements. Believe it or not, most people have no idea what these are. Unless you're an accountant or you're in finance day in and day out, you don't know what this is. You don't know why it's important. You don't even know why banks look at it. I mean, most people don't. If you go up and you ask for a loan, and they're going to ask for your financial statements, you're thinking of, oh, here's my checking account or my savings account. Well, no, they want it all. They want every. They're going to look at everything. Robert Kiyosaki, says he lives and dies by his financial statements. He knows every section of them. So what I'm going to do is this is a really long article, but it's really good. So I'm going to break it up into sections so we can kind of go through it. And this first part is going to be just kind of like the basic overview. What it is, what's in it, and we'll go from there. Okay? Now this is from Parento Labs. How to read financial statements. You're not going to be able to gauge the financial health of your business without all the facts. The problem is there's a whole lot of data out there, and it can be difficult to get everything in one place to perform some much needed analysis. That's where financial statements comes in. Financial statements offer an insightful window into your company's performance, but there are several types, and each type is designed to tell you something different about your company's financials. Now, this article is going to talk about the three basic statements, what to look for, and the three main ways to analyze financial statements. So, what is a financial statement? And what are the basic three? Okay? If a C-level executive starts talking to you about your company's financial statements, don't stress. Chances are they'll be referring to one of the three main types of financial statements. Those are balance sheet, income statement, and cash flow statement. All three are relatively straightforward, and each one serves its own purpose. To help you wrap your head around each financial type, we're going to quickly walk through how each one works. Alright? Now this is the balance sheet. The first one you're going to run into. It's your very basic what goes in there. A balance sheet is a table that shows you all of the references of your organization has available, how they've been financed up to a certain date. In addition, they should spell out your company's assets, owner equity or shareholder equity, and liabilities. Now that sounds like a bunch of weird jargon. Again, I'm talking about this like I have no idea what this is. Because when I started this, I didn't. Okay? Translation, your balance sheet tells you the book value of your business. It spells out what your company owns, what it owes, and what's been invested by shareholders. The balance sheets are also helpful if you want to figure out your organization's rate of return or evaluate your capital structure. All the data you need for this type of financial analyst is always sitting right here in your balance sheet. The next one is an income statement. A company's income statement is essentially a summary of all its revenue, expenses, losses, and gains over a specific period. Now, we've all seen those charts, especially whenever we're talking about, stocks and bonds. It'll go up, it'll go down. It'll go up, it'll go down. That's similar to what an income statement is. Okay? Income statements are critical for accountants and investors so they can analyze and report on how the company is doing in terms of its incomings and outgoings. They'll often be included in quarterly reports or annual reports because income statements paint a pretty basic picture of how a company's business activities are performing during a set period. Income statements also enable organizations to spot any emerging financial trends that they need to react to. If a department's spending too much money, or if they're not spending enough, if the budget for, let's say, maintenance, if the budget for maintenance is really high, we need to know why. If it normally is high, but they're not spending as much money, well, we need to know. All these things are really great in the income statement, and this is one of the things that Robert, who you probably know better from Rich Dad Poor Dad, he said he loves a good financial statement. He loves going to the bank and going through that stuff and then having it stamped. Cash flow statement. So we're going to stop after this one, but the cash flow statement is useful if you want a more detailed picture of how your company's cash positions have changed during an accounting period. If this term is new to you, cash flow is just a fancy way to describe the net amount of cash inflow and cash equivalents being transferred to and from your company during a given period. Cash flow statements can be split into 3 different parts, and those parts of your cash flow for operating activities, cash flow for investment activities, and cash flow from financing activities. Companies that watch their cash flow, companies like to watch the cash flow because it paints a pretty good picture on whether the business has enough money to operate in the short term and the long term. Because, of course, this is all based on how much cash moves in and out. Now, when I was starting to study this stuff, someone's like, have you ever been to a casino? Yeah. Okay, think of cash flow as a casino. Money moving in and out. How much cash is going to running the casino? How much cash is going into investing in new stuff? How much cash is coming from financing activities? All when you talk about it from a casino, because everyone knows what a casino is, it makes a lot more sense. They're a cash business. You walk in there, you give them some cash, they give you X amount of chips. They need cash coming in to pay for the lights and the sounds and the free booze and the food and all that stuff. They want you to spend time in there. And so to do so, they spend the cash flow on bright noises and, a bit more oxygen in the AC, really bright lights, no clocks. You can't ever see the outside. You have no sense of time. And how much of that is bringing in more business? What works, what doesn't? So those are the 3 basic financial statements. You got your balance sheet, you got your income statement, and you got your cash flow. In the next one, we're going to get into what a financial statement looks like and a bit more how to break it down. Because if you just look at one, you're going to get lost in the numbers. But this has been the Tao of Investing, and I hope to see you in the next one.